Scan for Sovi, your AI bestie. I got your back.
Producer surplus changes can be tricky when taxes hit the market, but we can solve this graph problem quickly by following 3 simple calculation steps. First, we identify the initial producer surplus by calculating the area of the triangle above the supply curve and below the equilibrium price of $5 before the tax is applied. Next, we account for the $2 per unit tax, which shifts the price received by sellers down to $4, while the quantity sold decreases to 10 units total. Finally, we calculate the new surplus area, which equals $20, meaning the total producer surplus decreased by $25. That makes option A correct. Well done! Scan the code. You can learn better with Sovi. Watch signs to avoid a rush. Trust given values and check your steps.